Hello, everyone. Um, as you might have heard me saying over and over, a lot of people are talking about stock market crash. Um, so I just wanted to share a couple of more articles um, on that. Um, this one is coming from T. Rowe Price, CEO, retiring boss of massive U.S. fund warns retail investors to step away from risk. Basically, he's talking about the risk in stock market. Stock market is all-time near highs, um, and it, he's saying that it's very speculative. It's not the values are not based on anything concrete. They are overvalued, and there is a potential that going forward there will be a crash. Um, so 1.6 trillion fund group, T. Rowe Price CEO Bill Stromberg, who is retiring at the end of the year. So this is another interesting thing. As he's nearing his retirement age, and he don't care who gets the helm of the company, he gets his golden parachute. He can. So now is the best time to speak the truth. Um, in last 2 years, there has been a way above average amount of speculation, and we've been in a cycle where there has been very free form risk taking. So a lot of risk taking in stocks. Major indices have been propped up by a small handful of extremely large overvalued companies. So those tech majors, Google, Facebook, Microsoft, and Amazons of the world, Teslas. Those are the one which actually are uh, basically causing these indexes to be very high. And as those go down, that may cause serious downside in the stocks. Um, I will share my views on that. But anyway, that's him saying that. Then now even Goldman is also uh, saying the same thing, that uh, markets have rallied a bit, or so-called Santa rally, end of the year rally, and the chances are going forward, uh, it may not be the case. So now my thoughts on this are basically there is a possibility that these stocks going forward in January may rise further because of buybacks. Um, so companies will have a lot of cash at hand, and they may, go for buybacks. Same insanity. They won't use that money for anything productive for the company, but rather waste it on share buybacks. Be as it may, that may help actually prop up the stock market further. It won't be a lot, as I see it. You may go 5%, if at all, maybe 6-7%, probably not more than that. So the upside is 5%, but then the downside is significant, especially when Federal Reserve has started the QT. Well, I shouldn't say QT, but tapering the QE. So they are not providing as much liquidity as they were in the past. And if the inflation is significantly high, then there will be a pressure from federal government to control that because of midterm elections and plunging ratings of Biden administration, and they might have to taper this QE stuff even faster, which will be really a bad headwind for stock market. And they might even have to start parallelly increasing the interest rates if inflation is really sustained and high. To tame that inflation, they won't have any other option. So yeah, there is chances that in coming few months the stock markets will be in a shaky position. Please share your thoughts and comments, and I will keep you posted on this. Thanks for listening. See you next time. Bye.